morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Hormuz Fatakia, and markets are down. The benchmark indices are down nearly 1%. The Nifty is hovering around 24,200. It didn't start off like this. The GIFT Nifty was suggesting a flat start. In fact, in the opening tick, the Nifty went on to hit a new record high, 24,461 or 66 thereabout. It was a new high. But from there, things just started unraveling, and now you're staring at a near 2% cut on the Midcap index. The small cap index, the Nifty small cap index, is down 1.8%, the biggest intraday fall that we've seen in the last 2 months. Look at the advanced decline ratio. One stock gaining for nearly 6 stocks in the red. And just about 30 minutes back when I was checking, there were only 3 Nifty stocks which were in the green. All the others were in the red. The picture keeps changing. But the point is that, it's across the board. There is that big sell-off that you're seeing. The culprits are on your screen. So M&M, it doesn't have much of a weightage, but M&M as a stock price is down 7%. So it's causing the biggest drag on the index. Reliance Industries, ICICI Bank are under pressure. The gainers list is very, very faint. It's just, Maruti, Suzuki. On both ends of the Nifty screen, you've got a Maruti, the top Nifty gainer, and on the way down, you've got M&M, the top loser. It's that battle brewing, right? SUV versus hybrid, who's going to win? And right now, just over the last 2 days, it appears SUV, after that relentless, hectic run over the last 2 years, is going to take a bit of a backseat while hybrid catches up.
The law of averages, right? After a relentless move, as you just mentioned, there's some bit of cool-off was anticipated, and it's reflecting in the stock price as well. Now, M&M is the top gainer on the Nifty in 2024. Even after today's 7% drop, the stock is still up 60%. So far this year, and I was looking at the valuations as well. At FY26 PE, it's trading at around 25.2 times. So the historical average is 15.9 times. So the run-up has caused this valuation concern as well, right? So some bit of profit booking coming in for M&M as well. But the broader markets are seeing a bit of a pain in today's session. The mid-cap index, the small-cap index, both of them seeing some sharp corrections as well. 84 stocks on the the small cap index are trading with losses as we speak, while on the small cap the number is even worse. That's 88 stocks on the small cap index that are trading with losses in today's session. What is bucking the trend though is RVNL. It made a record high yesterday. It saw a very sharp correction. It ended at the lowest point of the day from there. And today, it has recovered most of those losses. Now trading 7.5% higher, almost at 580 is RVNL. What is unraveling though in today's session, besides most of the other broader market names, are the shipbuilders, the Mazagon docks, the Cochin shipyards. All of these stocks who have seen a 70-80% rally in the last 1 month, they are seeing a bit of a correction today. They opened higher, and then they have cooled off. Cochin Shipyard, Garden Reach, both 2.5% lower. Mazagon Dock also trading with losses of around 3%. Mankind Pharma is doing well for itself. Pharma is doing well in general, I guess. Mankind Pharma is up 3% after the block deal. What's doing well as well is CAMS. CAMS is a stock that is up 6% as well in today's trading session. So, bit of a pain in the broader markets as well, but there is plenty of stock-specific action as well.
I think maybe there's also some concern in the run-up to the earnings, because there was a Morgan Stanley note which is saying that the earnings may moderate because of the high base. So they're still very constructive about the India growth story. Today, Citi, in that earnings call that we put out in the morning on Bazaar, they're saying that they're expecting a 2% Nifty headline earnings growth. And for the Citi universe, for all the stocks that they cover, a flattish year-on-year earnings growth. The drag is going to be energy. But if you strip that out also, X of energy, the Nifty growth is only expected to be about 8% on a year-on-year basis. And India has been, the whole of last year, we had a double-digit kind of an earnings growth. So maybe earnings may moderate, and that too could be a bit of a concern on the sidelines. But in fact, that's the cue, right? Because Q1 FY25 earnings are upon us. We've already seen Delta report their numbers yesterday. Today, you've got Tata LXC, but really, it starts with TCS tomorrow, which reports their numbers closer to about 3:45, 4 p.m. And then you've got that press conference at 5:30. So to talk us about what to expect this time, we have with us Dr. Bino Pathiparampil, Head of Research at Elara Securities, and he also looks at pharma very, very closely. Dr. Bino, thank you very much for joining in. First, give us the headline picture. What are you expecting at Elara going into the Q1 earnings season?
Good morning. Like you just mentioned, we do expect some moderation in earnings. For the entire coverage universe, we are expecting only 5% odd top line growth and a flat earnings growth. but that is severely impacted because of a significant YOY decline in earnings in the oil and gas space, where we are going to see significant contraction in GRM as well as retail margin YOY. If we exclude the energy sector, we are looking at still a double-digit earnings growth in the low teen to mid-teen range, which still appears healthy. Of course, it is a slowdown from the kind of growth we saw last year in FY24. But you also have to keep in mind that in FY24, we had some tailwinds in terms of softening commodity costs, softening freight costs, etc., which were sort of recovery from the disruptions that we saw during the COVID lockdown. So such tailwinds are now behind us. We in FY25, our expectation is that the overall corporate profit growth will trend more towards the long-term sustainable rates. And Q1 is possibly a window that shows us towards in that direction. So we are expecting, excluding energy, earnings growth in the low double digits in Q1.
Dr. Bino, good morning. Thank you so much for joining in. What I wanted to ask you is the scope for earnings downgrades a lot higher this time around compared to upgrades? Because considering the moves that most of these broader market names have seen, or even the index names, some of them for that matter, the expectations are just way too high, and that leaves absolutely zero room for error, I guess.
The expectations are high in terms of the valuation or the PE multiple, but in terms of actual estimates, consensus estimates out there, I don't see a lot of growth. I don't see any room for big earnings downgrades in most of the sectors. There could be select pockets where we see that. But across the board, a significant cut in projected earnings, I don't see coming through in the quarter. But of course, having said that, valuations are high, PE multiples are high. If the commentary of the companies do not sound so bullish going forward in terms of growth over the next few quarters, as well as going into FY26, we may see some valuation correction going forward. But an across the board earnings disappointment is not in the picture.
Okay, so no big earnings disappointment. Dr. Bino, just to move aside from the earnings picture, just for a brief bit, can you tell us what you've picked up on what's happening with M&M and Maruti? What are your analysts saying about the kind of moves that we've seen? And it's a very, very sharp decline in M&M. Are we really concerned that a 4-month celebratory 10% discount is sparking off severe demand concerns in the SUV space?
So what we believe is this is a temporary reaction to the regulatory announcements that happened over the last couple of days around taxes with respect to hybrid vehicles. And in response to that, players like M&M had to announce some discounts. But this is a temporary blip. Our view is that this is not fundamentally changing the outlook on the auto industry. While the growth rates, which were very high in FY24, will come down in FY25, we do not see this as a turning point in terms of fortunes for the sector or M&M as a stock.
Okay, so M&M will continue to lead. M&M, Tata Motors, they've been the big star performers in the auto pack, given the strength in their SUV portfolio. Do you think that's likely to sustain?
They need not necessarily lead, but we believe that the overall momentum in the auto stocks, including Maruti, including M&M, Tata Motors, will continue. We will see continued growth, although at a softer rate than FY24.
Now, Dr. Bino, I wanted to get to a sector that you track very closely, and that is pharma. And you've mentioned in your note that pharma companies are likely to report a 26% earnings growth year on year, and that is benefiting from a stable and improved pricing environment in the US. Is that pricing environment likely to sustain going forward? Do you see this as an inflection point for a lot of these pharma companies who have had pricing pressure for a prolonged period in the US market? And do you expect one or two particular companies to be a bigger beneficiary compared to the rest of the pack?
Our view is that the US pricing scenario will continue to improve. We have seen that improving over the last 1 to 2 years, and we believe that will continue. Possibly over a couple of years, we may see a scenario where we will talk about price increases in the US market rather than price erosion. So to that extent, we are very positive on the US generic space and all the companies which have significant leverage to that. Most of the large cap pharma companies, including Zydus Life, Sun Pharma, Dr. Reddy's, Aurobindo, Lupin, Dr. Reddy's, all of them have exposure and will benefit from this phenomenon. And we are broadly positive on the entire space. Within that, our top picks at current levels would be Zydus Life Sciences and Dr. Reddy's.
Okay, and you've got a sell call on Divi's Laboratory too in the pharmaceutical pack. What about technology? We've seen a run-up in the tech stocks in the last 1 month. Are they pricing in any potential good news? Is there a risk of disappointment because now the expectation has been, the bar has been raised with the kind of run-up that we've seen?
I do not think the 1Q numbers would significantly matter for the stocks because the run-up has happened and the stock is pricing in a recovery of demand, possibly 2 to 3 quarters down the line. So the commentary of the management would be more important than the actual numbers in Q1. Having said that, I believe that the kind of big improvement in growth rates that the market is looking for may not come through. Our internal estimate is that possibly a recovery of growth from the current 1 to 2% to a 5 to 6% level is already in the price. For any meaningful surprise and a meaningful upside in the stock prices, the outlook for growth should come in above 6% levels, possibly closer to the 8, 9, 10% levels, which we have seen historically. That as of now looks as a tough ask, except for select counters here and there. So as of now, I would wait and watch on the IT sector stocks.
All right, Dr. Bino, pleasure having you as always. Thanks a lot for joining in and sharing with us your expectations ahead of the first quarter earnings season, which has already begun, but begins for the Nifty 50 companies tomorrow evening. Time for a short break here on Trading Hour. Up next, we discuss what's buzzing in the commodity space. Manisha Gupta joins in on the other side. As we are on Trading Hour and shifting focus to the commodity space now, Manisha Gupta joins in, and today we are focusing on crude oil prices as well as the Indo-Russian energy ties. Manisha, over to you.
Well, there's a bit of an uptick coming in for the crude oil prices after prices fell 3% in last 3 trading sessions. Hurricane Beryl has made a landfall in Texas as Category 1 hurricane. It has spared most of the oil facilities there. They are restarting back, and that is a premium that seems to be getting off the prices. Also, the Canadian wildfires seem to be now lessening, and that has not impacted oil supplies there. The markets also are looking at a prospect of ceasefire between Israel and Hamas, and that geopolitical premium also seems to be easing off. Having said that, the markets will wait for the US crude inventories that come in today. Last week was a very sharp decline in crude, gasoline and distillate stocks. So if the numbers come in on the weaker side yet again, that could be supportive for prices. Apart from that, a very interesting report from EIA which says that come 2025 and you would be looking at lesser supplies and higher demand. So a condition or a situation of deficit could be emerging. That is what as numbers or developing story that the markets will keep an eye on. But even more interesting is the Indian PM meeting the Russian president, and there is a conversation about strengthening energy ties with Russia. India is the largest buyer of discounted Russian crude oil, and there is now conversation and energy cooperation in the field of nuclear energy, oil, refining, petrochemicals, energy, infrastructure, technology and development as well. So there has been a statement to that effect suggesting that as of now the bilateral trade between India and Russia stands at 65 billion, but come 2030 the target is for $100 billion, and much of that would clearly be on the energy side. So this is another factor that the street will keep an eye on.
Thank you very much for that. A little bit of a recovery is coming through in the Midcap index. The Midcap index is still down 800 points, but at the session lows, it was down more than 1,300 points. And a few of the PSUs, PFC, IRCON, are now back in the green after that little bit of a bounce that we've seen in the last 30 minutes. Industars too has managed to recover a tad bit from the day's low. We'll get into a break on that note. We'll come back, discuss market technicals. Vitesh Thakkar joins in on the other side with his top trading bet. Stay tuned. Welcome back. At least the markets have stopped falling. In the first 1 hour of trade, after opening at record highs, we saw the markets continuously fall till about 10:30, 10:40. But after that, we've stopped falling. So the fall has been arrested, and that's a good sign. The Nifty is consolidating for the last half an hour, 45 minutes, around 24,200. Autos continue to be the top sectoral loser. The Nifty Auto Index down 2.2%. We've talked about the cuts, the deep cuts seen on M&M, 6.5% down. Hero MotoCorp, Tata Motors under pressure. But even Maruti, pull up the intraday chart of Maruti. After opening up with strength, Maruti slipped considerably from the day's high and is now just up close to about 0.6%. So some profit booking has kicked in over there. Metals is the other sector where you are seeing pressure. The Nifty Metal Index down nearly 2%, with Tata Steel, Hindalco seeing losses of about 2%. And IT2 a bit on the back foot, profit booking. HCL Tech 2.5% down. TCS is under pressure, 1.3% gone on that, ahead of numbers tomorrow. But talking about results, Delta Corp is slumping after reporting its Q1 numbers. It's also a seasonally weak quarter. KDDL is the other stock which is on our radar after the company has announced some buyback. Mangalam joins in with details on these two stocks. Mangalam.
So we start with Delta Corp, where it is a seasonally weak quarter, and in addition to that, there were a couple of things that happened during the first quarter as well. One, this is also the first time year on year where the company is facing the higher GST impact. This was also the quarter where there was elections and the heat wave impacted casino operations. Add to that, there was weakness in their online skill gaming business as well. The company had to increase their customer incentives too. So net of that, the revenues were largely, eroded, down almost 88%. So on an overall basis, the company reported a 30% drop in revenues year on year. The company reported revenues of 180 crores. And when you have a 30% drop in revenue, obviously with higher costs, etc., you have to, see a bigger hit on the EBITDA, and that's exactly what happened. Margins compressed from 37% to 17%, a 68% drop in both EBITDA as well as the net profit. And the segments were, weak across the board. 25% drop in casino revenue, leading to a 60% drop in their operating profit out there. Online gaming, net of incentives, down 88% in terms of revenue, EBIT loss widening out there as well. And hospitality too saw a cut of almost 17%, and that's reflecting in the downtick that we're seeing in the stock price as well. On the other hand, in an otherwise wobbly market, one stock which is holding in the green is KDDL, and this after the board has announced buyback details. So it's a near 90 crore buyback. With the company is doing almost 2% of the equity, which will be bought back at a tender on a tender offer at a price of 3,700 rupees. Now remember, this is a near 12% premium to yesterday's close. But the reason why the stock is not zooming ahead is because at 2%, the acceptance ratio would be extremely low. More so because the promoter's stake is at 50%, and they are included in the buyback. So as a result of which, for retail, there would be 1% acceptance ratio itself. KDDL additionally is also the promoter of Ethos Limited, the seller of luxury watches, holds about 3,100 crore worth stake in the company. KDDL's own market cap is close to around 4,200 crore rupees. So if you give a holding company a discount, maybe that's another play that the street is looking at for KDDL.
Interesting, Mangalam. Thanks a lot for both of these updates. The first ever buyback that KDDL has announced, and the stock trading with gains of just around 1.5%, but can't say the same for Delta Corp. A forgettable day for them after their results, 5% lower on that stock as well. But moving on, then EDG Infra is the other stock in focus after brokerage MK reinitiated coverage on the stock with a buy recommendation. And Vivek is here to give us more details. Vivek, what does MK have to say in this?
Well, that's right. So, this particular company, EDG Infra, MK, after a while has gone ahead and reinitiated coverage on the stock. They have a buy rating with a target price of close to 2,100 rupees a share. What they're saying is that this particular company has seen a makeover from being just a small subcontractor into a diversified infra play. They're saying that the company has best-in-class operating as well as financial metrics, which has actually gone ahead and supported swift, stress-free growth, as per what MK has to say. The road segment, for all of the road developers, actually saw an order slowdown in FY24. This was number one in the run-up to the election, and also number two, there were significant restrictions that were placed, from both MORTH as well as NHAI. So what's actually happened is that what do they see going forward as far as the entire road sector is concerned? They're saying that the government's new Vision India at 2047 plan in the post-election cycle, they believe will go ahead and accelerate road award tendering. They're saying that EDG Infra has given quite a significantly strong guidance. 12,000 crore order inflows they are seeing in FY25, versus just around 4,500 crores of order inflow that the company saw in FY24. Along with that, the railway sector expansion, within that particular segment, they're seeing focus on high-speed corridors, freight and station upgrade. They believe that can go ahead and support mid-term growth. Solar and water are other segments where they believe that the company, which has order book of almost 1,300 crore from the PM Kusum scheme, is also one particular area of growth. As far as revenue and PAT growth is concerned, they are seeing a CAGR of 21 to 22% from FY24 to FY27. Total order books, mind you, at the end of FY24 was around 8,485 crore.
Thank you very much for that. Mitesh is now with us for a quick technical check at 11:30. Mitesh, are you surprised the way the markets behaved today after yesterday's up move of nearly 0.5%? You got a sense that there was some upside momentum in the markets, and today you've had this big fall, at least in the first half of the trading session. What explains it, and what's the near-term texture?
Good morning, Nima. In fact, I was calling for a decline because, while we made a new high, one, the bank Nifty did not participate on the upside. Two, I think the indicators were suggesting that, the Nifty was extremely overbought and they had already started turning south, and there was lack of momentum and lack of thrust on the upside. So I think this is okay. The first level on the Nifty has been tested around 24, 180, 200 zone. In case you break below this, look for 24,000 to be tested. The worry is the back Nifty still. It's already entered into a negative or a sell mode on the hourly and the 2-hourly charts, which means that this could be a slightly prolonged decline. While there is some support at 52,000, I expect eventually the bank Nifty could head to 51,500, 51,400 zone. So I think next few days will be choppy and corrective, and exiting on bounce back would be a good idea for people who are stuck in index at higher levels.
What about specific stocks then, Mitesh? Are you advising someone to buy the dip here because the dips are few and far in between, or are there some stocks where you're recommending to book profits?
So I have one buy and one sell almost. Jindal Steel is breaking down. So that's a sell with a stop at about levels of 1,016, 17, and look for a target of 950, 942 on the 940 on the downside. But what is doing good is ICICI Pru Life. That's making a fresh high. Buy here with a stop at 646 for targets of 675.
Thank you very much for that. Get into a short break. On the other side, we'll put the spotlight on MGL, M&M and Supreme Industries and find out why they're buzzing in trade.
Welcome back. Onto some more buzzing stocks in today's trade, and MGL is one of them, and that is because the company has hiked the CNG prices by 1.5 rupees a kg and PNG prices by 1 rupee per SCM. Now, the company has said that the price hike was due because of the shortfall in domestic gas allocations. Now, earlier we spoke to Ashu Singhal, the managing director of the company, and listen into excerpts from that conversation.
We were getting APM gas, which is at $6.50. From 82%, it has come down to 68%. So there is substantial reduction in the APM gas, which is the domestically available cheap gas. And the LNG prices were earlier down, but now it has started increasing again. So we are constrained to increase 1.5 rupees in the CNG prices. However, still we are the cheapest in the country in terms of CNG prices and PNG prices. So the per bike consumption, the cylinder capacity is only 2 kg. So to see any significant increase in our volumes, the number of bikes should be very huge. So it will take some time. Maybe next year we will get some volume, maybe 2-3%, and afterwards it can increase furthermore. But definitely it will take some time to, one, that people are getting used to the new bike, although it is definitely much more advantageous in terms of running cost. So double the numbers will give us maybe 10% volume, but then the numbers of bikes should be around 7-8 lakhs, which will take a substantial period to come to that number in Mumbai or in our geographical areas. The budget is passed and what is included in the budget or not. The other point which we are hearing is maybe the gas can be included in GST, because if that so happens, then excise duty cut will not be required. It will be one tax regime for the gas segment itself.
It's time to focus now on the auto sector then, and leading SUV makers Mahindra Group and Tata Motors have cut SUV prices. Parikshit is joining in with more details. Parikshit, what has been the rationale behind this price cut?
Well, the Mahindra Group has been saying that they have been indicating since February that they would want the waiting periods for some of their top models of XUV700 to come down. They want to also make the car more accessible to customers across the country. So this is a plan that was in the works for the past few months. They don't want people to think that this is a 25 or 26 lakh rupee car. They want to bring down the prices so that more people can buy it in the market. The same thing goes for Tata Motors, saying that they've hit a milestone with sales of the Safari and the Harrier, and they now want to offer a discount bonanza to customers for a 1-month limited period only. But as far as the price reductions go, price reductions and discounts are not just there in these two leading SUV makers across the board, be it Maruti Suzuki, which is offering discounts anywhere from the Alto K10 from 35,000 to all the way to 3.3 lakhs for the Jimny, be it Renault, be it MG Motor, Hyundai India, they're all offering discounts in the month of July. Multiple factors for that. One, it is being linked to what has happened in Uttar Pradesh because of the exemption from road tax on hybrid vehicles. UP is a big car market. Every month, about 2.6 lakh cars are sold in Uttar Pradesh. But car dealers and also car makers say this has nothing to do with UP because UP is just one market in the country. Apart from that, Q2 is generally a lean season because of the heat wave we're coming from, the rainfall and monsoons right now, the sowing season that is on currently. All of this put together makes sure that the demand is slightly muted at this period. Even Society of Indian Automobile Manufacturers had predicted that going forward, we might see slow growth or muted demand in the passenger vehicle segment. There is also very high inventory that we are coming out from. In fact, the Federation of Automobile Dealers had recently warned that there is 60,000 crore worth of inventory already in the system. Inventory is as high as 60 to 67 days. And there is an urgent need for correction. There are 6.5 lakh cars with an average ticket size of rupees 9 lakhs each, which are unsold in the system right now. So there is a need to clear all of that inventory as well. Another reason that we're getting from a lot of automotive dealers and experts is that when there was a lot of pent-up demand in the system and there were supply constraints, the car makers were enjoying a very premium selling point. And now, when there is no longer any kind of supply constraint, it is a buyer's market, there is a need to make the prices more competitive. So some dealers say that discounts are good, it will correct the inventory, it's good going into the festive season. Others feel that the discounts could be even higher because we won't see that kind of strong demand that we saw for 2 to 3 years after COVID-19. So lots developing over here, and we could see more discounts. The two leading SUV makers announced discounts, announced price cuts within hours of each other. But this currently right now is an industry-wide phenomenon, not just limited to 1 or 2 companies.
Pariksha, thank you very much for that. And that number of 60,000 crore of inventory is really telling. Thank you very much for that. As we count down to the budget, the Road Ministry is expected to get a higher allocation versus the interim budget and also compared to last year's budget. Danish is now joining in with the details. Danish.
Well, Modi Government 3.0 is all set to present its first budget on 23rd July. In the upcoming budget, the government is likely to increase its focus on the road, transport and highway sector. Sources told CNBC-TV18 that the overall budget allocation for the Ministry of Road, Transport and Highways is likely to be around Rs 3 lakh crore, which is much higher than the interim and previous budgets. They will be more focused on rapid transformation of the road and highways network across the country. The government is likely to set a target of 3,000 kilometers for new highway construction, and there could be enhanced focus on increasing digitization in the sector. Ministry's digitization targets will likely include announcement and full plan on GPS-based tolling and usage of AI for finding flaws in current roads and highways. There will be enhanced focus on use of future technologies. The government is expected to make announcement on future energy-compatible highways, that is, highways for EVs, LNG, etc. Sources told CNBC-TV18 that there could be announcements on specific capex for further developing the charging infrastructure and EV battery recycling facilities. The announcement will be made keeping in mind Vision 2047. As by 2047, government aims to build a highway network of 50,000 kilometers.
Danish, thanks a lot for that update. From roads, we move to real estate, and the market there is experiencing growth and an increase in demand as well. Now, Asiana Housing, based in Delhi, intends to have more presence in Navi Mumbai, the Delhi NCR and Bangalore. Talking to my colleague Timsi Jaipuria, Ankur Gupta, the joint managing director of Asiana Housing, says that the government should focus and come out with policies for services like assisted or senior living and caregiving.
Very excited about what's happening with us and the industry at a whole, and specifically our senior living business that's growing. And now we're looking at 3 more locations. One is Panvel, second is Bangalore, and in the Delhi NCR looking at either Noida side or Gurgaon side to add another project. So we're hoping to close those 3. Plus we're looking at projects in Jaipur, Jamshedpur and Bhiwadi, and very excited about what's going to happen, and hopefully trying to add about 25 to 30 lakh square feet this year in land.
25 to 30 lakh square feet is what you're looking to add in this particular year itself. Where will the funds come from?
Luckily, because of the sales being very good in the last few years, we've mostly internal accruals, and we also have a tie-up with IFC. So between the two, we should be able to fund these projects.
Any number that you would like to give it to me, that how much of investment would this mean? What sort of delivery plans are there?
So right now I don't have a number, but I see that we should be able to do it within internal accruals, and most of these projects will come under joint ventures. So the investments will be lower in the beginning, but a lot of the investments will go into the development side and the pre-development side. And the future is looking good, and we have lots of projects launch planned, and specifically again in the senior living, where next month we're going to be launching our 9th senior living in Chennai. And this is going to be one of the upmarket. We're calling it a sophisticated senior living because it's going to be for the upmarket clientele for the first time. So very excited about what the future holds for us.
When you talk about sales, you said sales are very good. What are the current sales volumes, and what are the expectations by the end of this fiscal?
So this last year we had a booking value of 1,798 crores, almost 1,800 crores, and we're expecting this year to about touch 2,000 crores. So God willing, we'll do that.
You're looking at 2,000 crore worth rupees of sales. How are they going to be for, say, next 3 to 4 years? Because you're talking about senior living, you're talking about new plans to be added, new projects to be added. When we talk about new projects, obviously they'll not take off immediately. You are going to first close the land parcels and then construct it. So what sort of a sales are you looking from these 6 to 9 places that you're talking about in the coming years?
So overall, right now the sales volume which we have planned is in the 6,000 to 8,000 crores in the next 3 to 5 years, and we see that happening.
When we talk about budget is around the corner. Any wish list that you have for the finance minister to consider, especially when it comes to housing side? A lot has been talked about on affordable housing. A lot has been talked about how capital gains tax should be realigned so that people invest more in housing. What are your budget wish list?
I think one of the biggest concerns which we're not talking enough about is seniors. And I think as India is aging, and we'll see population changing from being young to older, and as we live longer, I think the biggest challenge we will face in the future is senior citizens. And one of the things I think we should be looking at is the insurance piece of the pie, and we should make sure that not just medical side, but a lot of services side gets covered. So if you look west, even services like assisted living is covered through insurances, and I think one of the things we should be looking at in the future is IRDA covering these kinds of insurances for our seniors.
When you talk about insurance, you talk about more and more services getting added, more and more policies expanding towards seniors. Anything specific that you've written to IRDAI about that they should consider?
So I think the caregiving services is a very important services, and that lasts a little longer. And I think parts of the caregiving services should be covered within the cost of IRDA.
When we talk about insurance, there's a buzz that government should consider reduction of GST on health insurance, on overall insurance products that we have, life insurance. Is that on your wish list too?
Obviously, we always talk about GST reductions. I'm not. It's always like at a balance. We need to make sure that we balance the government budget at the same time making it affordable for the population at large. So we need to figure that out. And insurance is an area which is going to be more and more critical as healthcare cost goes up. So I think GST on insurance is something I would suggest to reduce. But obviously, balancing the budget is more critical.
Asiana Housing there in conversation with Timsi Jaipuria. Time for a short break. Up next, we put the spotlight on Mcure Pharma's stellar listing and find out why Supreme Industries is buzzing in today's session. Stay tuned, back on the other side.
Welcome back. The Nifty, which was at 24,200, has picked up a bit, 24,250 now. So about a 40-50 point recovery is what you can see. LTI Mindtree in the large cap space has started moving up, and HDFC Life is also now back in the green. In fact, LIC is another stock you should pull up. LIC is also up nearly about 2%. Remember, in the latest insurance updates that we got for the life insurers, both HDFC Life and LIC stood out. And India Cement is a stock which is seeing some nice price and volume action in the last few minutes. And railways as a pocket, as an entire theme, have rebounded. So RVNL, we spoke about it because of the order win, but even the others like IRFC, RailTel, Ircon are now back in the green. RITES is under pressure, but the rest of the pack is now back in the green. But let's talk about Supreme Industries that's buzzing in trade. There was a Jefferies note on it. Sudarshan joins in for more. Sudarshan.
So Jefferies maintains buy call on the stock, and target is raised to 6,700 from rupees 5,390 per share, indicating an upside of almost 15% from current levels. And what does Jefferies say? It says in the first 2 months of this fiscal, volumes for the company have grown by 22% despite a high base of last year, and sales have grown by 12% impacted by PVC volatility. Jefferies say if companies focus on value-added sales can aid the margin in FY25, and SKU breadth and distribution depth act are key modes for share gains. Company will be a good play on housing, capex and agri, and Jefferies estimates 25% plus EPS CAGR over FY24-27 for Supreme Industries.
Thanks a lot for that, Sudarshan. Supreme Industries, a positive note, but the stock in line with the broader trend in the market today, trading 1.5% lower. But pharmaceutical company Mcure Pharma has listed on the last read today at a premium of over 30% to its issue price. Ekta is joining in with the details. Ekta, tell us more.
Well, yes, Mcure Pharma has seen a good listing in today's trading session. It is listed at a strong premium. The issue price at the top end was of the price band was around 1,008 odd rupees. Now, the subscription itself was very strong. It was totally around 67.87 times. They've also raised around 582 crores from 48 anchor investors. So you can see that the trends itself for this particular IPO were quite strong. Fresh issue of 800 crores and there was an OFS of around 1,151 crores. They're looking at 600 crores in terms of debt reduction from the IPO proceeds. So the debt will come down to around 900 crores from 1,500 crores. 48% of their sales does come from India, 52% from international markets. They have around 13 manufacturing facilities. Margins in FY24 were a bit of a problem. So it came in at around 18 or 19 odd percent versus 20% on a year-on-year basis. And the company has said that the last 18 to 24 months, the company has been impacted by around 1,000 medical reps, being added on, and that's really impacted margins. And if you look at it compared to peers as well, the margins have been sluggish as compared to most of the listed peers, that even in case of valuations. Valuation-wise, it is way more expensive if you just compare it on an FY24 trailing PE basis for all of the companies. So it'll be important to see what the earnings trajectory looks like for the company going forward. They have indicated that the second wave of capex, which they have around 1,200 crores for 4 facilities, will get commissioned and will aid margins. They also expect debt reduction to aid the profitability because there will be an interest cost reduction as well. The other key point to watch out for is Sanofi and Mcure had entered into a distribution pact for their cardiac drugs. So whether or not that will be a huge upside for them in the domestic business, they can get around 48% of sales from the domestic business. And chronic segment of drugs will also be a big growth driver for them. They currently get around 45% sales from there.
Thank you very much for that. Even the other listing of the day, Bansal Wires is holding on tightly to all its listing day pop, 35% up on Bansal Wires. The stock is now at 345 and 89 rupee premium. I was just reading what Nigel had indicated, that some of the reasons from our last interaction, and we had spoken to the company in trading, are they're saying that going ahead, the earnings will improve because, one, the company will be debt-free. They're raising for 745 crore. A bulk of that will go in paring down their debt. There will be some capacity expansion, and also they're getting into specialty steel, which has higher margins. So that's another added kicker. But good opening for both those stocks. Get into a break. We'll come back with more. Stay tuned.
Welcome back. There's a bit of a recovery coming in from the lows of the day for the Nifty. Around 24,140 was the low, is what the index made. And since then, it's been a pretty good recovery, actually. 100 points higher from the lows of the day, but still 0.6% lower on the index, 150 points down as we speak. But the broader markets continue to face pressure because all sectoral indices are trading with losses as we speak. The 76 stocks on the small cap index that are trading with losses. There's been a recovery there as well, because at the start of the show there were 89 stocks on the small cap index that were trading with losses, but still 1% lower for the small cap index. And when we speak of the mid cap index, that is also seeing around 83 stocks that are trading with losses as we speak. The recovery has been seen in stocks like RVNL that has extended its gains now, Mcure Pharma, but a cool off has come off in stocks like CAMS. We started off the show, the stock was trading around 6% higher. At the start of the trading session, the stock was 9% higher. Now the stock is trading with gains of around 4%. But what's not doing well in today's session are stocks like Bharat Dynamics, the entire defense space, the high-flying defense stocks, all of them surging anywhere between 90 to 100% already this year, and they are seeing a bit of a cool-off in today's session. That too has recovered from the lows of the day, though, Bharat Dynamics, but still 3.5% lower. The top loser on the mid-cap index is IEX, and that stock now is trading with losses of around 5% as we speak, and 173 now on IEX, 5.5% lower there as well. Bandhan Bank is the other loser in today's session. Remember, this, the interim CEO takes charge today, and that continues to remain an overhang on the stock now as to who would be the new MD and CEO at the lender. Remember, the interim CEO is only in for a period of 3 months, so we'll see more developments coming in there on Bandhan Bank, 4% lower on 193. But as we wrap up on this edition of Trading Hour, earlier today we spoke to Conrad Saldana, the Managing Director and Portfolio Manager at Neuberger Berman, on his take on the markets and the upcoming budget. From me, Rima, and the team that put this show together, thank you so much for watching.
We've already looked, fairly behind the headline names or historically, and you had an opportunity in March when the market sold off. Right now, obviously, we're at a point where the multiples are not as conducive as they have been. But if you take a longer-term view, maybe it's a time correction on these names that might be utopian, and maybe it's an inflation print that brings a little bit of jitters into the market that gives you that opportunity. But I think we've already looked at these interesting mid-cap opportunities, knowing the promoters well, the businesses that we believe are going to execute. It's the same names. I think the budget is definitely what has people excited, right? Given that the market's already done well into this, barring the wobbles after the election results. Definitely, there could be, I shouldn't say definitely, but there potentially is the possibility of some more stimulus. But I think the government has been pretty measured in terms of keeping an eye on the fiscal. So I do not see a major trend that's going to change that.